want to know how the wealthy avoid paying huge amounts of taxes? It's not a secret. One word: depreciation. And if you're a business owner, a real estate investor, or an entrepreneur, you can literally save thousands, hundreds of thousands with this strategy every single year. In this video, I'm going to break down exactly how depreciation works and what kind of tax write-offs you can start implementing. Also, what's even best, what kind of deductions you can implement legally so that you can save hundreds and thousands of dollars. Hey, if you're new to my channel, welcome. My name is Taylor Kenda. I help you grow your investments, grow your businesses, and master the money game. And if that sounds like you, go ahead and hit that subscribe button. Depreciation essentially allows you to deduct the cost of a single asset into the entire duration of the life of that asset, instead of piling all the costs and being hit in year one when you purchase that asset. Easy example, let's say for example you purchase a vehicle or a truck for $50,000. Instead of being hit in year one and doing the deduction in year one, depreciation allows you to spread that out over a duration of time, say 5 years. This allows you to reduce the amount of taxable income that you have, essentially allowing you to win and save a lot of money. So why is this important, especially for the wealthy? Because it allows you to reduce your tax bill without you even spending money over and beyond. It's essentially like a paper expense that protects your actual dollars. Now, let's talk about the 3 types of depreciations. Number 1 is the straight line depreciation. And this is probably one of the most common one that our students use. Essentially, the asset that you purchase loses equal value for the entire duration of its useful life. Say, for example, you purchase a real estate property for $500,000 and the amortization rate, or the useful life, or otherwise the mortgage duration, is going to be 30 years or so. Every single year you have that asset, you could essentially write off about $1,600 every single year. And that's in equal installments. Number 2, let's talk about accelerated depreciation. And this is probably one of the most popular ones that a lot of people use. And it's essentially front loading all your deductions in the front years, instead of just spreading them out equally over the entire duration of the useful life of the asset. And this is very useful if you're trying to lower your income very, very quick. Especially if you're growing fast and you're scaling at a fast rate and you need to lower your income for tax purposes. This is a very powerful strategy that you can use. Number 3, bonus depreciation. And this is very big, especially for real estate investors like myself. Bonus depreciation allows you to deduct 100% of the cost of the asset, of certain assets, for the first year. Think of equipment, vehicles, softwares, various other things that you can write off. And this typically works for vehicles that are about 6,000 pounds and above. So especially for real estate investors, there's real estate depreciation, which is a powerful, powerful tool once again. Generally speaking, residential real estate depreciate over 27 and a half years. And in commercial real estate, we're talking 39 years or so. This essentially means every single year you get a solid tax deduction just for owning the asset. And what's good about that is even when the market is growing and increasing in value. And what gets even better about that, you can do a cost segregation study for each component of the house and break down, and then you will be writing off certain components of the house. You can write off things like carpets, fixtures, appliances, and this is one of the biggest reasons why I always tell people to get into real estate as fast as you can, because doing this unlocks massive upfront deductions. So I put together a list of depreciable assets for you in the description below. Check it out. Here's the thing about depreciation. If you sell your property or your vehicle, the IRS is generally going to want you to reimburse and return the depreciation. And this is called depreciation recapture. But there's a trick that I'm going to give you to save you from paying a lot of money to the IRS. If you 1031 exchange a real estate property or you strategically exit, you can essentially defer on all those deductions. And that's a smart strategy for you to use to avoid recapture tax. And comment down below and I can make a separate video describing and going more in detail on 1031 exchange. So depreciation isn't just a tax deduction. If you use it and you implement it and combine it with a good CPA and good smart investing, you can significantly lower your tax income, which will save you a lot of money as you're building wealth. So go ahead and grab my free guide on depreciation and deductions that I have in the description below. And if you like this video, you found it valuable, hit the like button, hit the subscribe button, and share with other people as well. I drop videos every week to help you master your business, master your investments, and master your mind. All right, see you in the next video.